Good morning, everyone. It is half an hour before the market is going to open on Wednesday, July 17th. So yesterday we were talking about the S&P, how we were expecting it to fluctuate between 565 and 560. So let's see where the market is opening this morning um, and see how we're doing over there. If we look at our futures, we are definitely in negative territory, significantly so, actually. The S&P 500 down 1%. Okay, so that is huge for a pre-market move. We've got NASDAQ down 1.5%. So huge swings, huge moves in the NASDAQ and the S&P. Then we have the Dow down a lot less, about 30 basis points. So the Dow is still in random territory, and the S&P and the Nasdaq are down significantly. So before we get too excited about this movement, because 1.5%, that is a really large movement, but the Dow is not following. So the first thing that tells me is that it's mostly in Nasdaq. So we're still getting that rebalancing effect where the Dow is playing catch up to the S&P and to especially the NASDAQ. If we see this in the small cap stocks, then as well, then what we're really seeing is the tail end of a rally, of a uptrend. So let's see if I can, I don't see Russell here. So let's just look directly at the IWM. And we see we are pulling back some, but not a huge, so we're only undoing about maybe 40%, 50% of the gain yesterday. So in other words, in the QQQ, we were up 0.04% yesterday, and now we're down 1.5% at the open. You can see it's very near that EMA 20. So that is significant. We completely blew out the move upwards yesterday. And now we're trading very near a EMA 20. And we were talking about how we needed a mean reversion, how at the very least, and maybe a pullback. It looks like we've already got the mean reversion in the QQQ. And the chances of a pullback to the MA50 in the QQQ are very high at this point. We also saw yesterday that in the afternoon session that the number of stocks making a 90-day high was over 600, and the ones making a 90-day low was less than 20. And we said, when we see this, when we go above 400 on either 90-day high or 90-day low, then a reversal or a temporary pullback is imminent within 2 or 3 trading sessions. So it looks like we're getting it in just one session. So the indicators are very good, and everything is aligned with our expectations so far. So what we want to see is just how far we expect things to move. We already said the QQQ is hitting that mean reversion level at the EMA 20. So chances are pretty good that we're going to keep on going. If we do that, then we've got the SPY, and you can see that I was saying between 565 and 560 was my expectation for this week. That 565 level was really good, and that was pretty bold of me to call that because we closed right at 564.86 yesterday. So I only gave myself 14 cents of room on the SPY, and today we're already pulling back to the EMA 8 right here. So I do expect this to continue down to the EMA 20. Is it going to happen today or tomorrow or Friday? That I'm not entirely sure yet, but it does look like we have a very good chance of coming down to that EMA 20. If today we just keep on moving downwards, then yeah, then that 560 level was blown. And what I said yesterday was that once we get past this 560 level, then we're pretty confident that we're going to go down to this 540. So far, that is all playing out. And maybe not necessarily 540, it could be 545. That's a very strong level as well. Let me just throw that in there. Okay. Which would be kind of the midpoint of this chop sideways over here. This is more the bottom of this box. This would be the middle of that box. And the 540 level is also where we gapped up to on this day in order to create this box. So it's looking very good so far. Just overnight, suddenly, it looks like what we were talking about yesterday is starting to play out. So on the Dow, you can see that we didn't pull back nearly as much. This is not halfway. If we pull back halfway, then we would know that the Dow is probably in trouble as well, and that we're going to get that mean reversion off of this parabolic move. If not, then we could chop around a little bit or move a little bit higher before we start mean reverting. So we'll have to just see how that plays out. If I look at the IWM, same thing. That's not halfway there yet. It's probably like 33 and one third of this bar. And again, that's a different story than the S&P and the QQQ. The S&P yesterday was up 0.59%, and this morning we're opening 1% down. So completely blowing out the move upwards. And that's a different story for IWM and the Dow Jones. Before we get too excited about IWM, though, this is a parabolic move with a lot of gaps. We don't want to chase into this. And if I look to, okay, so this is a pretty important level that we hit yesterday. And we need to be able to get above it. And then we have this right here. And then if we get above that, we have this right here. So if we can get above this, then we have another level, 2 levels above that we need to cross before we get really bullish or too excited about the IWM. Another way we could look at this is Cathie Wood, the ARK stocks, ARKK. We haven't looked at that in a long time. You can see the Cathie Wood that we haven't reached this purple line yet. We're not quite there. So yes, it is somewhat participating in that move up in IWM, but it's not nearly the same as IWM. And remember, the ARK funds are the most speculative of the IWM stocks, which are already very speculative. So what we really need to see is this to break out and start leading before we believe the move in IWM, and we need the move in IWM before we believe that we really are in a bull rally. And it just doesn't look like it yet. So this is probably going to mean revert pretty soon. But so far today, it's looking like it could hang on to it. We'll just have to see after the market opens if we start selling off or not. Let's look at it on an intraday basis. You can see here that we drew that line at 565, and it was barely breached in the last few minutes of the day, but then it pulled back below it. And that 565 was our ceiling. And this morning, suddenly in the pre-market and in the Asian sessions, this really sold off. So we need to see if my theory about it being concentrated in the tech stocks is true. And it was indicated at least a little bit by the Dow Jones, by the fact that the Dow was still in random territory in terms of moving downwards. And so that was our first indicator. So I need to dig a little bit further. Unfortunately, this morning I can't really rely on sectors because they won't be updated. A lot of the sector ETFs aren't updated this early. We don't have the pre-market in the sectors because we need to see how each individual stock performs each individual stock that makes up the sectors performs. So, for example, if I go into XLK, I might have some data. Yes, I do. But if I go to XHB, I guess I do. XLF. Yeah, okay. I might have a little bit of data. XLI. Okay, I guess I do. And so, but I'm going to approach it slightly differently. Let's go, well, XLP, barely down. XLI, barely down. XLB, slightly up. XLF, barely down. XLE, barely up, slightly up. XHP, barely down. XLRE, barely down. So everything that I've looked at so far has not moved that much. If I look at XLK, large movement downwards, that's gapping down below its EMA 20. If I look at XLC, much better. So not right into this purple line that we drew. I don't remember why we drew this purple line, but perfectly into that purple line and still above its EMA 20. So XLC is looking much better than XLK. So let's just take some representative stocks. So let's look at Walmart, for example. Walmart is slightly up, 8 cents up in the pre-market. So this is definitely sector specific. NVIDIA down, gapping down below its EMA 20. Taiwan Semiconductor, ESMC, TSMC, TSM. Okay, gapping down below its EMA 20. So it looks like chips are not doing that well. AMD gapping down to or just below its EMA 20. Intel up a little bit, but it's in such terrible shape. I wouldn't put any significance into that. Let's take a look at Netflix. Gapping down. Oh no, it's not down that much. Sorry. It already hit its MA 50. Let's take a look at Apple. Looking at these, yeah, gapping down to its EMA 8. And a couple other FANG stocks. Which one am I missing? Microsoft. Okay, gapping down. So it already kind of breached its EMA 20 yesterday. Now we're gapping down even further. And Tesla. Okay, gapping down, but not too bad. And one more. Amazon. Amazon down, but not terribly down. So Amazon has a bit of retail in it. Let's look at XRT. XRT down, but not too bad, just tiny bit. And let's look at XLY. XLY down, but still within the range of the previous day. So we can see that it is very much concentrated on XLK. In the sectors that we looked at, the only one that was really gapping down was XLK. And in all the individual stocks that we looked at, it was really those tech stocks that were gapping down. So this is healthy. This is good. What that means is that when I look at my Dow Jones, I am probably going to peter off. This is parabolic. I'm probably going to start chopping sideways and wait for my moving averages to move upwards. Then the QQQ is mean reverting for sure, already mean reverted to CMA 20, and very good chance we're going to come down to that MA 50. And the SPY is, depending on how strong that influence of that QQQ is, we may hit our EMA 20 as well. That MA 50 is less certain. So it's looking okay. And we do need that mean reversion, preferably a pullback, in order for the markets to healthily continue movement upwards. So maybe we get it this time around and we do hit that MA50 and then we can bounce up and move upwards. What basically what I went through just now tells me that we might stop at the EMA 20. We will almost, if we break the EMA 20, we will almost for sure stop at the MA 50. So the chances of us having a correction all the way to the MA 200 is very low at this point. So yeah, we're gonna go down. We're gonna have maybe a pullback, but not a correction. Let's take a look at what VIX is doing. So with movement downward like this, it's not a huge gap in the SPY. It is a much more significant gap in the QQQ. So VIX might be elevated, but I don't expect it to go to like 20 or 30. So VIX, yeah, jumping up to 14. And so a VIX hedge over the last couple of days, I've been talking about how it was moving up and that VVIX was moving up as well. So if VVIX is moving up, that's the acceleration. That means we're going up faster and faster. So that is indeed happening in the VIX. So having that hedge there, VIX hedge is helpful. So let's see. We put on as an example that VVIX, and it's starting to pay off for us. I don't know that this is updated yet. This is probably from yesterday, and once the market opens, we will see. We'll probably have a better return on this than what's indicating right now. So I would still keep that VVIX on, or sorry, the VIX trade on, that VIX hedge on, because that S&P, well, we really are just going to say, hey, we're probably not going to stop right at that EMA 8. Maybe for this week we will, but next week there's a pretty good chance that we'll at the very least hit that EMA 20. So we would just keep that VIX on to protect us. So in terms of positioning, this is I was saying yesterday that I wanted to wait for options expiration, but this is actually giving us a very good look into the market, because when the S&P is pulling back and it's gapping down like this, it's not a huge gap, or the QQQ is gapping down, that is a strong gap. And remember, over the last few days, it was like, hey, don't get the fear of missing out. The S&P is up and we've been neutral on the markets for all this time, and the S&P keeps on going up and making more highs. Don't get the fear of missing out. So if you listen to that, then you avoided going long yesterday, and you're avoiding this pullback that is starting to happen, especially QQQ. Don't avoid tech. And if you notice, all the longs that I was looking at for the last couple of weeks is not tech, not tech, not tech, because we were expecting that pullback to happen first in tech, because the gains were all, for the most part, inside of tech or inside of those large cap FANG stocks. So that is serving us very well today. Do we now go into tech or now go into the FANG stocks because it looks like they might gap down a bit? No, just wait for the move to end. Like Nvidia, would you go in right now? Absolutely not. You'd wait. You would wait for a balancing confirmation. You don't get too excited, or as the saying goes, catch the falling knife. So what this does give us the opportunity to do, though, is look at the strong stocks. So for example, we saw Walmart. S&P is down. Walmart is flat to slightly up. It is very strong relative to the market. So what happens when the SPY bounces, or if it touches its EMA 20, and let's say it bounces, what's going to happen to Walmart? And at that point in time, money is rushing into safer stocks, running away from tech. Walmart's going to do very well in that environment. So what we want to do today is start looking at the strongest stocks relative to the markets. It's not going to be tech stocks. We don't want to buy into those tech stocks. So unless there's an extraordinary tech stock that starts going up today, that would be very interesting because when the QQQ bounces, then we would expect that stock to do even better. So on days like this, where you have these strong mean reversions or strong pullbacks, or periods of strong mean reversion or strong pullbacks, it is a lot easier to see the superstars. When everyone's doing well, it's a lot harder to see. But when the market craps out and most of the stocks crap out with it, suddenly the superstars are standing out. So it's much easier to find them. So today I'm going to be looking with eagerness on this to find the strongest stocks and maybe start positioning uh, in those. And then next week, when or after Friday, when we get options expiration, then we'll have even more opportunity to see where institutions are actually moving their money. So we have two opportunities now to see where money is going or to find really good candidates. So we are not going to be sitting on our hands very much longer, and that's exciting. Okay, so we'll end it right here. In terms of expectations, I don't want to say anything today other than if we pick a direction, and if that direction is downwards, then it could it could go down. It could be very directional. If the direction is upwards, then we're still capped out, still by that 565. But this 560 level, now that we're below it, let me move this to 560. It's going to be, it's going to give some pretty stiff resistance. And if we go through it, then yeah, we can move up maybe one, maybe two of these regions, but I I kind of doubt it. So we are leaning to downward bias today. Unless the Dow Jones, because the Dow Jones is down also. If the Dow Jones was flat or up, then we would say, hey, there's a decent chance because the SPY is a blend of the QQQ and the S&P stocks. But since the Dow Jones is headed down as well, that's making the upward prospects of the S&P 500 very limited. So we are downward biased today. And if it goes, it could really go. Okay, so we'll end it right there. Have a wonderful morning, a wonderful day, and I will see you in the after market.